All right, mate. I already made a video and it didn't save. Um, well, overall, this does look like a bullish compression pattern. A few things here, like you can see the space that was in this moving average here. You can see the price came up and wanted to fill that space. You can see the space in here. Price wanted to come up and fill that space. You can see the space. Well, it's filled some of the space, but there's definitely more space above. So it is looking like price wants to come up and fill that space. There's also, we're bullish on the month. We're green on the month. Once you're green on the month, you can continue higher. And price likes to come up and test the top end of these wicks. Like even up here, if you look at that sort of area, which is the monthly yellow 9 EMA, it's a little bit below the previous highs. But if you even check what that is, like as a rough, you can see a very rough line where I drew is up there. So it appears above that yellow 9 EMA, is up into the top range there. So it does look like price wants to continue higher up into that area. The only kind of concern that I have, what makes it tricky is the fact that you're buying. Well, you're maybe looking to buy or whatever, but it's already up here formed a bullish engulfing candle. Price is already up a lot, is what I'm saying. So do we need to dip down, for a safer buy to get into this? Like, for example, in 6 days' time, is price going to drop back down into the 50% retrace of the candle, roughly, before getting that sort of continuation or back up to the upside, like it did here, for example? You get that dip down, and then it goes on up from there. So you can see what that green line is. So if it's saying if there is a dip down into that area, 7205 level or whatever, that is a beautiful level to be getting long up into here. Target up and around here, and target obviously up and around that previous highs to fill all this space. So I don't like FOMOing today, right now. I mean, it's up 13%. That's not my style to be FOMOing in and up there. But on a new day, sometimes you get 2 or 3 days in a row and it just does it all straight away, and you don't get any dips. So the way I would do it is I would hope that this would finish fairly strong, and a new day maybe dip down, flip green again, you get long and put your stop below the new day's lows. For example, if I can find this, if we see MBL, look at MBL here. I know this blew up through it, but look at the second day. This was up 60-70% earlier, and you can see that this it had a dip down, had a decent dip down actually, but as soon as that flipped green again, price ended up, if you just got long on that, then it was a 75% bounce. And this is what can happen. You can get these second day strengths. So we have a strong day today. My guess is, or my safer way of doing it would be to trade that second day and see if we can get continuation to close that gap.